Cyber insurance is surging onto the horizon with promises galore, yet with a hollow core. Enterprise risk managers may respond to the Siren's call of cyber risk management through cyber insurance as a way to cap cyber security risk. While cyber insurance may be attractive because it substitutes the easy cyber risk management measures for the more demanding process management and engineering measures required, such an approach promises to thwart the full evolution and development of such insurance. With insurance underwriters and actuaries leading the way, cybersecurity subject matter experts have yet to be fully engaged in framing underpinnings of the cyber insurance market and its development. The catalyst for the cybersecurity market and its full development might be a coherent and convincing opportunity value proposition. But at the end of the day, you may need to fight for your claims in order to get paid. A review of the last 4 insurance industry working sessions reveals a failure to construct a coherent and convincing value proposition. Predicting loss is stymied because cyber incidents have not been quantified, and it requires a significant history of cyber incidents to draw upon. There has been failure to close the gap between IT practitioners and insurance underwriters on what comprises the consequences of a cyber incident. Instead, undeterred, cyber insurance advocates are pressing ahead by substituting the soft skill adoption of a cyber risk management culture for the hard facts of cyber analytics as the foundation for cybersecurity compliance. The first order of business in advancing cyber insurance is a standard IT protocol and semantics for the assessment of forensics-based outcomes, pattern-based bad actors, and model-based consequences to be applied by IT practitioners in building a shareable cyber incident intelligence database. With a standard IT cyber incident assessment protocol and semantics in place, and a sizable population of recorded cyber incidents, insurance underwriters and actuaries would be able to begin their work on a more firm footing. The catalyst for the cybersecurity market and its full development might be a coherent and convincing opportunity value proposition. The order of things in beginning the work needs to consider the following. First, insurance underwriters need to avoid jumping directly to financial loss implications and legal aspects and sanctions. Instead, IT practitioners, subject matter experts, need to address and assess forensic-based outcomes in terms of unauthorized access, loss of data, tampering with data, erosion of performance, and denial of service. They need to assess pattern-based bad actors' attribution in terms of an inadvertent actor, disgruntled employee, hacker, corporate spy, criminal, organized crime, and nation state. Finally, they need to assess model-based consequences in terms of cleanup, lost opportunity, recovery, loss of trust, loss of availability, and loss of privacy. A usually reliable figure on the national cybersecurity stage dubbed the idea of fines for organizations who suffer cyber attacks as unsophisticated and punitive. Well, sophistry is the use of fallacious arguments, perhaps with the intention of deceiving. Quite the opposite, a cyber fine imposed on the victim of cyber incident is straightforward, while in fact cyber insurance itself may border on the deceptive. Since neglectful and unprepared organizations serve as an attraction to cyber bad actors and their actions, these unready organizations make the internet less safe for everyone. While fines may appear punitive, they actually operate as tough love measures that encourage organizations to take the prudent measures known to be effective in order to improve the landscape for all. Just why does cyber insurance border on the deceptive? Insurance is based on risk, and risk is uncertainty and the prospect for loss or gain, depending on the outcome of an event. An industrial strength software risk management practice is one that treats risk as uncertainty and carefully distinguishes risks from the sources of risk and problems. Since risk is uncertainty, the challenge is to calculate the uncertainty of a risk and accept only those risks whose joint probability of occurrence and prospect for loss or gain are prudent choices. These are considered calculated risks. The uncertainties associated with a useful and credible cyber insurance market are wide-ranging and depend on cybersecurity theory and foundations, reduction of theory to practice, the collection and use of empirical practice data, the validation of actual practices against the theory based on empirical data, information sharing, realistic premium setting, information and trustworthy coverage, and straightforward dollar convertible cyber consequences. These uncertainties have not yet been reduced to calculated risks. Therein lies the source of the deception. In the absence of actual answers to the questions suggested by these uncertainties, the undeterred cyber insurance advocates are pressing ahead by substituting the soft skill adoption of cyber risk management culture for the hard facts of cyber analytics as the foundation for cybersecurity compliance. While a cyber risk management culture may be necessary, it is a partial solution and not a sufficient condition alone without a genuine cybersecurity foundation. The catalyst for the cybersecurity market and its full development might be a coherent and convincing opportunity value proposition, framed as follows: to responsibly insure against losses for critical infrastructure operators, supply chain managers, and industrial organizations of all kinds associated with cyber attacks, vulnerabilities, weaknesses, and neglect, and to guide the progressive anticipation, avoidance, withstanding, mitigating, and resolution of their effects, both outcomes and consequences under all circumstances of use. In accordance with the Cyber Risk Management Security and Resiliency Framework, spanning management commitment to perimeter defense and defense in depth, business continuity process maturity, system survivability engineering, and system of system resiliency engineering. A cyber insurance integrator is needed to commission subject matter experts to work collaboratively with insurance underwriters and actuaries to draft a coherent and convincing cyber insurance opportunity value proposition, to draft a cyber incident database specification, and informed by assessing forensic-based outcomes, pattern-based bad actor attribution, and model-based consequences. In accordance with cyber insurance opportunity value proposition and database specification, to initiate the following cyber incident data collections for utilities and energy, telecommunications, banking and finance, transportation, and medical systems, with particular attention to systemic risks and the triggers that lead to propagating and cascading effects among these systems of systems and their using systems. Frame the terms of reference for a renovated cyber insurance way of thinking spanning stakeholder, opportunity value proposition, requirements, software solution and architecture, way of working, team, and work. Roll out the renovated cyber insurance way of thinking as a technology transition project involving all stakeholders. And finally, determine and exploit the applicability of IBM Watson as the integration element for cyber insurance marketplace. The uncertainties associated with the useful and credible cyber insurance market are wide-ranging and depend on cybersecurity theory and foundations, reduction of theory to practice, the collection and use of empirical practice data, the validation of actual practices against the theory based on empirical data, information sharing, realistic premium setting, informed and trustworthy coverage, and straightforward dollar convertible cyber consequences. Cyber insurance is a function of theory, practice, empirical data, practice validation, sharing data, premiums, coverage, and dollar convertible consequences. What percent of cybersecurity knowledge is actually known? How is this determined? And what is the fundamental theory of cybersecurity? What percent of known knowledge has been reduced to practice? How is this determined? To what extent is cyber insurance insuring against the shortfall in the fundamental theory and practice of cyber security? To what extent has empirical data been collected and used in cyber insurance? How is this determined? To what extent is cyber insurance insuring against neglect and poor practice of cybersecurity by a client organization? To what extent would IBM Watson assist in profiling the fundamental theory and practice of cybersecurity to vulnerabilities and weaknesses associated with outcomes, bad actors, and consequences, and calculating the cybersecurity operational risk of an organization? Is a cyber incident database specification available? Has data been collected to populate the repository? Just what is the calculated risk for an organization putting information and data on the internet that it cannot afford to lose under any circumstances? To what extent is the theory of cybersecurity understood, valid, and practiced? What percent of empirical data is available and used to characterize current industry practice and incidents of cyber attacks? To what extent is the empirical data organized by outcomes, bad actors, and consequences? To what extent is indemnification necessary to enable information sharing? Are premiums based on empirical data? How is industrial empirical data tied to a specific organization and its operations? How are premiums varied by increasing practice maturity of known practice? Is there actuarial data to back up a cyber insurance premium structure? Does coverage tie into consequences such as cleanup, lost opportunity, recovery, loss of trust and reputation, loss of availability, and loss of privacy? To what extent does cyber insurance insure against specific outcomes, bad actors, and consequences? Are consequences expressed in financial and cost terms? How are financial and cost consequences actually derived? Beyond the risk of a cyber attack itself, there are other risks to consider. Can you get the coverage you actually need? Maybe not for loss of reputation, opportunity loss, cyber readiness expenses, loss of intellectual property, loss of profits. Will the insurer pay off on your claims? Well, maybe not. There are early experience in the courts points to difficulty here. Dodging cybersecurity risk through cyber insurance may be risky. You may be paying for something you need but can't get or won't collect on. Does cyber insurance deliver value or simply false hope? Keep in mind that insurance companies have a bias based on their calculation. Premiums minus claims equal profits. So plan to fight for your claims. Here is my contact information. I would be happy to receive questions and have discussions with people on this important subject.